Good morning, everyone. Morning. Evening to Kevin. Good to see you, Kevin. Hey, getting started a little bit early today, folks. Got a couple things on today. Got to get ahead of it. So thanks for joining me a little bit early. But normally we're at 10 past 8. But maybe even a little quicker one today. But great to see you here, team. Good to see you in the morning or the evening, wherever you are. Kevin. Danny. Ricky, how are you, mate? Brendan. Haven't moved it. The normal start is 10 past 8. However, today I've got something on at 8 o'clock, but I haven't jumped on for a couple of days because I had Monday off and public holiday. So I thought I'd at least get a quick chat away this morning. Anyway, maybe 10 minutes if we've got time. Hey, good morning to all of you. Hey, morning, Chris. How you doing? Good to see you. Hey, listen, we'll get into it this morning. Wanted to talk about market sentiment. My little iPad this morning is not behaving, not connecting to my system here. So I'm not struggling to connect the thing to my system. So I'm not going to be able to scribble on something this morning. So I thought we might talk about a report that just got released. It's a good report. Australian API Property Magazine puts out the Property Investor Sentiment Report. And I don't know if anyone's seen this, but it's quite interesting. Why do we want to talk about property or sentiment? How people are feeling about the marketplace is a good one, because for us as property investors, the market, how the market feels is a good indicator of when and how and maybe what we should be doing. And often, maybe tell me in the chat right now, this is kind of like maybe it's a trick question, but what's the saying? It's kind of a saying, when it comes to marketplaces. It's a famous saying anyway by Warren Buffett. Well, it's probably famous from someone else. When the market's all excited, you should be afraid. And when the market's afraid, you should be excited, right? There you go. Hey, morning, Rob, all the way from Brazil. Great to have you here, mate. Thanks for zooming in or tuning in to the live. Property sentiment. So, yeah, when there's fear, buy when there's fear and sell when there's, elation. Yeah, that's it, Nigel. So what does that mean for us as property investors? What does it mean when, my disposition when it comes to real estate in Australia is like buy well, don't sell, like buy the thing, keep it. And what's going on in the market and how are people feeling? Well, for me, how people feel is what happens is the indicator of the size of the change, positive or negative in the future. It's not an indicator of, for me, should I keep something or should I sell something, right? So let's talk about that sentiment stuff this morning just quickly and what's going on today. I don't know if anyone watches this. Does anyone watch what's happening today? Anyone know what's going on today? Something that I'm looking at. Anyone know what is going on today? Financially, it's a bit weird and a bit quirky, but some of us pay attention to it. Does anybody know? What is being released? Some information, some data is being released today that could have an effect on the property market. Boom, Nigel's on it. Good work, Nigel. Nigel is on it. The CPI, our releases, here we go. Consumer Price Index today in Australia is being released today about what's happened in the past quarter. And how do we feel about that? Well, if the CPI is up, the trend, the conversation says it looks like it's going down. the last one got released, the RBA paused the interest rate rises or the cash rate rises. That's good news for us. An early indicator for property prices. Already property prices in places like Sydney have shown an improvement, gone up in value in a quarter in March. So anyway, the CPI is coming out. That's going to affect market sentiment. It's going to affect how people feel about if they're going to buy something. That in effect for us as property investors is something to be aware of. If CPI is down, RBA very highly likely, no more rate rises. And that could be it. If the trend is downwards in CPI, no more interest rate rises. At some point in the future, sometime next year is the common thought, common prediction. Sometime in 2024, interest rates or cash rates will go down. I predict interest rates will go down before cash rates will go down. That'll be a competition from the lenders. They're already CBA dropped its fixed rate a smidgen the other day. So there you go. CPI, flat or down, which mean RBA will keep the cash rate at flat or, won't do anything. There's an outside chance that CPI is up for some reason, potentially in and around rentals and accommodation and things like that. And there's an outside chance that the CBA might put up the cash rate a little bit one more time. My call is it won't, but maybe the CPI figures aren't flowing through as fast as we would like to see them. I get to feel and see the property market out the front in people's lives all the day because I look at their bank accounts, I look at their financials because we coach, and people are changing what's going on. So let's have a look at the sentiment. I've got a few minutes to hang out with you guys today, and then I've got to chuff off and do something else. But anyway, here's the drill. API interviewed or surveyed 1,000 people, and did they have concerns about the interest rates? Well, last year was when the interest rate concern peaked with these people, and now it's down a little bit. That's great. What does that mean? It means people are a little bit more either settling into this as the new normal. It's not such a shock. And what are they going to do about it? Well, let's have a bit of a look. Let's have a little conversation. Is there financial stress arising in homes? That certainly is in a number of places, certainly starting to take effect. But I've showed before on this catch-ups, Wealth Coffee Chats in the morning, that, Aussies have actually got quite a lot of financial backup since COVID. Largest amounts of savings we've ever had, etc. Largest amount of equity we've ever had in our homes. So, not too bad. So is there any positivity out there in the property market? Well, it's not as high as it was before. Well, obviously that would be self-explanatory, but it's interesting to see what the sentiment might look like, and who's intending to buy in the next 12 months. Intending to buy in the next 12 months. This is the part for me, which I like, is like, right now, it's kind of like a buyer's market. Well, it was anyway, because it's already underway. It's a buyer's market out there, right? Certainly in certain places, certain types of properties. If you're not competing with, that localized owner-occupier specific property that an owner-occupier is going to pay more than they should for. Well, what does that mean? It means we as investors can have smart deals, drive a decent bargain before things take off again. And they're going to, folks. We've chatted about this, all right, which is interesting. Rental crisis worsening. Yeah, we know that. We've seen that. There's affordability concerns. On the flip side, for us as property investors, that's nothing we don't already know. If you're on one side of the ledger, that's going to be tough for you. It's on the other side of the ledger, as property investors, we get to put up our interest. We get to put up our rents, which we should and need to. You run a business. You're not a charity. Your costs have gone up. Interest costs have gone up. So you need to raise your prices to stay in business, right? So when the interest rates go down, and they will go down by a full % by the end of 2024, there's my predictions right now. Put that in your diary, a full percent. Then your rents aren't going to go down. Your rents are going to stay up. The margin for you from cash flow is going to be pretty sweet at that point in time. Things are going to look good, right? It's a great time to be getting into the market as far as I'm concerned. Is there inflation concerns? Well, we talked about that just now, and that's going to be talked about this morning about the CPI index, all right? So what can we glean from the whole thing is that people are seeing and feeling that property prices are going to go up. The majority, that's switched of recent times over 6 months. So the psychology, the futurists in real estate, property investors, smart ones, getting good data and good info, are saying, hey, we see this property market heading in a decent direction. Maybe it's time to get on the bandwagon. Maybe it's time to buy that next property that we were going to buy. Yeah, maybe it's time to do the do, right? Whatever that looks like. So there you go. There you go. I thought that'd be worth quickly chatting about this morning. And here's, we talk about the mortgage cliff. The mortgage cliff is coming. What should we do? Check out the number one thing that people would do if they were concerned about the mortgage cliff, folks. They'd do a lump sum payment to reduce debt. They've got some cash sitting around. Interesting. Well, that's what that means to me. Alter their spending habits. Yeah, no shit, Dick Tracy. That's pretty straightforward. Sell property and assets. Property is illiquid, not that liquid. What assets would they sell? I can tell you right now, people will sell other things. The caravan they bought, they don't use anymore. Their shares, they'll sell other things before they'll sell their house. I can tell you that. And there's plenty of other things to do. So I'm not concerned about that. You guys, we've talked about that before. Away you go. And, these are, some of the concerns around what's going on out there in the marketplace. Affordability, finance, fluctuating prices, interest rates, rental yields, availability, yeah, et cetera, et cetera. So anyway, grab that sentiment report. It's a good one for you and I as property investors. We need to be sort of tuned into what's going on. And it's always pretty useful to really, understand what the market might be feeling, thinking, so we can make decisions, not in a vacuum, but in response to what's happening. Because real estate, folks, real estate's an emotional gig. People get emotional about it. Investors get emotional about it. Most people make emotional decisions when it comes to real estate or purchasing or investing. And for you and I, we can make smart decisions by understanding good information, bit of market sentiment, get some good data, and stick to our strategy as we go. Anyway, that was a quick one this morning. I didn't get a chance to scribble on my notepad because it's not working. Technical glitch this morning. But hopefully that was useful. Join me tomorrow for another Wealth Coffee chat, folks. Fast and furious this morning. Great to have you here. Thanks for joining. It will be normal time tomorrow. The program will resume at normal times tomorrow, folks. Anyway, there you go. I better not rabbit on too much because I've got something to get to at 8 o'clock today. Thanks for joining, folks. Good to see you. Join me tomorrow for another Wealth Coffee chat. Take care. Bye for now.